Okay, so I wanted to do a quick video on a weekly cash flow template that I use in pretty much every business. So this is a 12-week, week by week cash flow management tool that we use. It's especially useful when working with very tight cash flow, but I would recommend using this regardless. I would do this on a weekly basis to make sure that you're managing your cash properly within the business and that you've got a handle on all the incoming and outgoings and make sure you know where you stand in terms of your cash position. So it's a really, really useful tool, and we've kind of developed this template so that it's quite dynamic and a little bit easier to use. Although it is quite manual still, and there's a reason behind that. So I'll go into it and kind of show you what how it works, and then I'll come back and kind of mention some of the high end points of this. All right, so we've got it set up here as at the moment I'm working on a Google Sheet version. I'll leave links in the comment to grab a Google Sheet, and I'll try and do it in Excel as well. Um, so what we've done is I've built out the sort of 12-week spanning across, and I've made it so that you can edit that. So the process I would typically take is every Monday morning, basically come in and do this first. And so if you double click on the date here, it'll allow you to select a date. And then if I change it to next week, you'll see it automatically updates all the dates. So those are based on formulas, which is quite useful. But I'm going to leave that as the 6th of November for the moment. So the process really from a Monday morning, you come in, you update the date to I typically do it on a week starting on the Monday. So this would typically be the Monday date and it'll run across. And then I'll work through all our cash balances in the bank, make sure we update these. So this particular template is developed with pound sterling as the primary currency. Of course, you can go ahead and change that to whatever currency you want. This particular, the way we develop this is most of my companies are based in the UK, so we've got them set up as pounds as the primary currency, but we typically use euros as well. In some of them, I've got USD as that, as well as that. So we might have balances across multiple bank accounts, and I would highly recommend if you don't already have at least two bank accounts, just in case one gets frozen or you have any issues with it. Banks can be a little bit sticky these days. So I would highly recommend having at least two bank accounts with two separate banking institutions if you can. All right, so we've got pounds bank A, pounds bank B, and then obviously euros for each. And then I've put in a daily exchange rate, which I typically grab from xe.com, get the daily exchange rate, just so that it allows our calculations to be a bit more accurate. So I would come in every day, just quickly log into all the bank accounts, double check all the balances, and update the exchange rate. So that's the starting point. So then we need to go and look at expected cash in. And so here we'd basically list out any of maybe you've got recurring payments, you've got project payments, whatever that might be. This is ideally any money you're expecting to come in. And you might do this, one line per customer. You might do it as a bulk, this is your recurring income for a particular sort of revenue type, whatever it might be. So you can kind of play with whatever works best here for you. But really what I would typically recommend if you're doing project-based work is you'd have a line for each customer or each active project. And then you can break down when that money is expected to hit the bank. Now, this really should be when the money is expected to be in your account and available to use. I would lean on the side of being a little pessimistic here. And so, if your billing date, so for example, the due date is the 7th of the month, maybe you'd push it out to the following week, 13th to 19th rather, because it might not arrive exactly on time. If you've got a client that has a history of paying late, I would push it out even further. And so you really want to have this as accurate as possible, best guess when it's actually going to hit the bank account, rather than when you've asked the customer to pay by. So just be careful of that, because this obviously messes with the timings quite a bit. Now, the important part is obviously every week when you update this is you want to make sure what payments have actually come in and what haven't. So if I've just come in off the back of last week, since I had this set up last week, and I was expecting this payment to come in and it hasn't, I'd push that out a week. So I'd move it into the following week. Or perhaps we've had some sort of dispute or issue or whatever, you might even push that out a bit further. And the idea is that we've got an accurate running total of what's expected to come in. The other thing is obviously if it has come in, just delete it off the list. So if this, for example, this week, we had payments come in over the last week, we'll just delete that. And that should then be factored in, obviously, because it would be reflected in the bank balances. Okay. So this then has a running total. So this is the basic sum of these fields. Now, usually I intentionally leave one line blank at the bottom just so that we don't mess with the formulas. And so if you want to typically leave, even need to leave a couple of them, and then you can add in an additional field in between here, and then it won't break all your formulas. The other thing to do is once you start a new week, you would want to typically just shift everything over. So I would then go and grab and highlight and just shift everything over by one block. And by doing it and staying, keeping your selection within this sort of white cell block here, is that you won't mess up the formulas. So that's really helpful just to keep that in mind. But yeah, so basically just make sure that you have this up to date and accurately reflecting the 12 weeks ahead. Okay. Then moving down, we've got expected cash out. I've suggested grouping a couple of things here. So we typically group direct debits or subscriptions. And so we'll put all of this in here and then just pop in the relevant dates as to when they're going to land. And I like to itemize this down as much as I can. And the reason for this, and again, part of the reason this is manual, is so that you actually have a look at what you're paying for on a regular basis. I've seen so many companies, and I've done it myself in the past, where you end up having subscriptions that have been running for 2 years, you've never used them, but you just keep paying for them. It might be £10 here, $10 there, whatever it might be. It could be a couple of $100 or whatever. Point is, by doing it somewhat manually here, is it gives you visibility into that. Okay, so just go and make sure you've plugged in the right sort of dates when you expect it to hit. So obviously, if it's a monthly recurring, we know it's going to fall within that date range, and so you can repeat that out. So again, try and be as accurate as possible here as to when the money's actually going to come out of your account in which week. Okay. Things like payroll, we've done it a couple of different ways depending on the business. So sometimes you'll just have salaries as a bulk amount. Sometimes we've broken this down where we've got individual employees or staff members listed separately. Up to you. It kind of depends which you prefer. I've got a personal preference of having a split down between each employee, but it does depend on the size of your team. We also typically categorize freelancers in here. So if you have some regular freelancers or anything like that, this I would usually recommend splitting out into individual freelancers. Again, helps you keep tabs on what's actually being outsourced and whether it's relevant. Again, depends on the size of the business. If you've got 25 different freelancers, you're not going to break it out individually. You just want the sum total. Same with consultants. If you've got any professional consultants you're working with, maybe a business coach or somebody like that, definitely helpful to keep that in there. And then obviously your pay as you earn or any sort of government payments that you need to make, that would typically be made like the month after. So you would normally know how much that is and when the payment date is, and you can plug that in as you go as well. All right, so just make sure you know what money is expected to come out of your account. The other thing I suggest is any credits or payment plans. Now you might not have this, in which case just delete these couple of lines. What we've done in the past is if we've had to renegotiate a payment plan, due to tough times with cash flow or whatever it might be, we might have a payment plan with the creditor. This could also be, we do have bank loans here as a direct debit, but if we've, specifically dedicated a certain payment plan where we do either need to make manual payments or whatever it might be, we can just break that out here as well. And that just helps us, again, a bit of a manual check. Are we still paying it? Is it paid up? What is the balance and so on? All right. Then sort of general expenses, of course, you can build this out if you want. Things like your VAT payments, make sure that you've got those in your cash flow. We've also got, often had things like intercompany loans. If there's a portion to be paid back on a regular basis, that's helpful. Bookkeeper costs and so on, rent, etc. Now, some of these might end up going into your subscription or direct debits if they automatically go out, but if they're manual payments, I'd probably pop them in here. All right, so this would be typically your recurring but manual payments that need to be made each month. All right, ad hoc payments. This might be any specific payments, like as a one-off. You might add particular, maybe you had to, like in this case, we've got Christmas party. You might have any sort of random ad hoc payments that need a place to go. Pop them on the sheet here, and off you go. And then the last section I've got is, for example, if you're doing particular project work, you might want to list any payments for suppliers or subcontractors within that block. and we've got a space for that. So it's quite nice to just separate them out. You can do that, or you can kind of work with how suits you best. Point is again just to make sure that you've got these scheduled in. So, and one of the things we do is we make sure with our accounting process, obviously once a bill comes in, we make sure we capture that bill, make sure it's correctly allocated in the accounting software, typically in Xero, and then once it's set for payment, make sure that it's on the cash flow. So we would usually say we cannot authorize a payment unless it's on the cash flow. So this is one of the conditions in the process of a payment being made. It has to be on the cash flow. We have to have accounted for it. And so we know that it's coming off the bank and in the relevant week, obviously. And then basically there's a bunch of calculated fields at the bottom. So we know how much cash is going out. We know what our net cash flow is. So total sum of everything coming in plus, minus everything going out. And obviously it's conditionally highlighted here so we can see, if there's any weeks with negative cash flow. And then we've got a cumulative cash flow at the bottom, which basically sums up your ongoing cash flow. And this gives you that 12-week projection as to is anything good or bad, or if you're going to run into some trouble. Now, as an example, let's say, for example, here, I mean, we've got quite a large cash balance here, but if we had to somehow have a very large payment going out, we can see if it goes in this week, we're still fine, but that will mess up the weeks down the line, and we know we're going to be short on cash based on what's incoming. Now, this becomes incredibly useful when you've got your incomings are maybe not as accurate, or the clients, push out a payment. You can immediately shuffle things around. So, for example, if I look at this one, maybe we can get this customer to pay a little bit earlier. I mean, that's probably not a great example, like 3-4 weeks earlier, but that can help. Then we've actually got positive cash flow for the next couple of weeks, and then we know we've got to manage things a little bit differently going forward. So it does give you a really useful tool in terms of managing and making sure that you've got positive cash flow and you don't run out of cash. And then you just set yourself an internal sort of margin as to what a minimum cash balance would be. Depends on the size of the business. Smaller businesses, I would say, at least 10 grand. Bigger businesses, obviously a lot more. But it really depends that you can manage that cash flow accordingly. All right, so I hope that's really useful. Again, just a quick recap. This is manual intentionally, so you can make sure you double check everything and make sure you have an eye on all the money coming in and going out. Updated usually every Monday. You come in and basically update your starting date, your bank balances, any money that's coming in, that you have received, you remove. Any money that's going out that has been paid, you just remove, and then you shuffle the rest as you need. And again, you would just shuffle that. So, for example, you would highlight the block of payments, and we've shifted it all forward a week. So there we go. And you can do the same with the expenses. Kind of shift everything forward. It does get a little bit more tricky when you've got stuff all over the place, but it is a good exercise to keep an eye on this and do this manually. All right, here we go. Hope that's really helpful.